Welcome to the Investing Mastermind Podcast. My name is Sina Lundholt.
And I'm Michelle Markey.
Today is part 2 of Michelle and I sharing everything we learned at the Berkshire Hathaway annual meeting. In last episode, we talked a little bit about some of the events that went on before the Saturday meeting. The event on Saturday is the main event, and that's where Buffett and Munger has their long QA, as well as the Berkshire Hathaway business meeting and general assembly for the business. Today, we wanted to pick out a few things that Warren Buffett said at the meeting and share with you guys. And we wanted to start out with some good advice for us as investors. That's really important because Warren Buffett got a question from the audience if him and Charlie Munger had ever made a decision when investing that was emotional. And I think a lot of beginner investors can relate to this of taking emotional decisions, either buying or selling. But Munger and Buffett's advice is clear. So Warren Buffett says, you don't want to be a no emotion person in all of your life, but you definitely want to be a no emotion person in making an investment or business decision. What about you, Michelle? Have you ever made an emotional decision when you were investing?
Well, maybe a little bit. Yeah, I've definitely had some anger come to me when I was seeing some of my stock kind of go down in price, and it kind of made me annoyed at myself that maybe I paid too much for it. And then sometimes when we feel a little bit emotional in investing, we then double down on our mistakes and then we compound a mistake and make it even worse. So sometimes it's a good thing where, if a stock price is going down and you buy more, but then if your investment case is flawed, like my investment case was flawed when I doubled down, then it came to bite me and make a situation worse, like a value trap stock. So I did that before, and I try to learn from that and not do it again. And how about you? Did you ever experience something like that too?
Yeah, of course, I would say. Now, Buffett and Munger says they never made an emotional decision in business or when investing, but I'm definitely guilty of investing with my emotions, especially before I learned about Warren Buffett style investing. I would make emotional decisions, both buying and selling, being really excited. I heard about a stock and going in and buying it, or feeling really insecure when the stock went down. It's definitely something that I noticed from before. And I think, with Warren Buffett style investing, it makes it so much easier to take the emotions out of it. Last time in our last episode, we talked a little bit about the video that Warren Buffett showed ahead of the meeting. It was with Jamie Lee Curtis, the actress, where Warren had her convince Charlie Munger to buy internet stocks. And she did that by trying to persuade Charlie Munger to do it and really charming Charlie Munger. And they talked a little bit about that video as well when they answered this question and said, well, the Jamie Lee Curtis video was just for laughs. And yeah, that's something that they just wanted to highlight because they don't make emotional investing decisions.
Well, speaking of that situation, I know they make it kind of a joke, but sometimes you have to read a little bit deeper. And even though, like, I think this is good for investors to not just take the first answer and accept it as truth and fact, like the whole truth, because even though they're not gonna succumb to just normal internet stocks, like not the ones that were super crazy back in the .com bubble, like with Yahoo and other one and AOL and other ones like that. But Buffett and Munger, even though they said no to making emotional decisions, they have made a little bit of emotional decisions by being somewhat stubborn. So the irony is they act like they didn't make emotional decisions, but sometimes they actually did. Like when Buffett likes to talk about how they bought See's Candies for $25 million in 1972, and he wasn't willing to budge from that number. I think the original asking price was something like $30 million for See's Candies, but he was so stubborn, and he said that it was stupid of him to be insisting, like he got lucky and they sold it to him for only $25 million anyway. But he could have gotten unlucky if the owner originally had said, no, I'm not willing to sell it to for less. So in some ways that was a little bit of an emotional decision, not super crazy. Like they probably were just trying to stick to their guns and say 25 million is as low as it's going to be. But I think in retrospect, by Buffett saying that it was a bit of a mistake to be so stubborn, that's also a great lesson for beginner investors, is to not just be so stubborn and always insist, no, it has to be this price. Like there's a little bit of room for, you know, a little bit more that you could potentially pay. So we should see, if we're seeing a company or a stock available, we should be open to a range and not just say it has to be exactly this precise number, but a range that we are comfortable with investing in a company.
Yeah, I'm definitely guilty of that mistake, being like, okay, I just needed to go down a little bit more. I would probably buy it at this price, but I would like it to go down a little bit more. And then it did not go down, and huge regrets of not buying it at that price. That was a fair price.
Yeah,
So I'm definitely
agreed.
guilty of that mistake too. Okay, so back to the meeting. Did you notice anything else that beginner investors could learn from Warren and Charlie?
Yeah, like some of the general life advice that's also good when it comes to investing is avoid toxic people. So, I'm sure many people have friends or family members who might be like, "Oh, you should get into this stock. I did well in this stock." And, you're so dumb for not investing in this. Like, look at me. I bought into the stock and look how much it went up. But we shouldn't give in to peer pressure. So, the point is that even though some people might mean well, they can also be toxic sometimes. Like there's like different kinds of toxic people, and people who make you feel bad about yourself, and they question your decisions, and they call you stupid for not wanting to invest. You shouldn't listen to someone like that. You should make your own investing decisions. So one of them was just avoid toxic people, and the other point that Charlie Munger made is to defer gratification. So a lot of us just want to make money right away, right? Like who doesn't want to make money? But in deferring gratification, we should try to think long term, of like planting a seed that will then grow into a beautiful plant. And we have to think about that in investing. So to not be in a rush to make money, but if we can delay gratification, like eat our cake later, not just eat all of it right now, then maybe we'll be better off in the long run with our investments compounding.
Yeah, and that thing also came up when they talked about generational wealth and inheritance and succession planning, where Buffett talked about how important it is to prepare well for when it's time to leave this earth, and make sure to create a will and talk to your kids about what you actually wrote in that will, so it's not the first time they hear that once the person has deceased. He said, this is a mistake you don't get to correct. And I just thought, there were some really important lessons in something in there also, because he has known so many people that might have not planned very well, have planned their estate very well and passed away. And then, it's the kids that are left and trying to figure it out. And, he said that eventually what you want with this type of planning is you want your kids, for them to get along. That's kind of the main purpose. And of course, estate planning is not the only place that you can mess up your kids not getting along, but getting that right, it's difficult, but it's so important. He also said, if you want to figure out how to live your life, write your obituary and reverse engineer it. And I really
Mhm.
like that quote. We talked a little bit about that one, Michelle.
Yeah, for sure. Like if you imagine all the accomplishments you might have in life in your obituary, if you want to achieve those things, like think about it ahead of time. And it's a little bit morbid to think like I have never written my own obituary, but we can think of it in a more positive way. Like let's say we have a vision board and we write down our goals, like want to buy a house, have a family. If you write those things that you want to accomplish in life and kind of like think about what will it take to get to those achievements? Like you'll think about it differently. And also, planning for wills, like that's also something, I want to talk with my parents about to make sure that their wills are updated and stuff like that. So all of those things are very
Mhm.
important and great for us to help, make sure we communicate. Like communication is one of the biggest issues just in everything in life. So the more we can improve in our human communication, the better our relationships will be, and hopefully, like when it comes to estate planning and things like that, that hopefully everybody can be on the same page. Because if you're not, then if there was no will, or if things were left kind of unclear, then someone's assets could go to probate court, and then people have to duke it out in a court, and that's not fun. So if you can, it's important to plan some of these things in advance, like not only the will, but also, kind of like how your parents want to be buried. Do they want to be in a casket, or do they want to be cremated? All those things, they're not comfortable to talk about, but they're important to know ahead of time, like what your family traditions are, so that you can plan for it and maybe even invest for that purpose, because funerals are not cheap. But also, there's an investment idea from that, because there are some public companies that own a lot of the funeral homes. So maybe, you could potentially invest in some of these companies, knowing that they've kind of cornered the market and there's some, investing possibilities there. So just a little idea. That's something in the back of my mind that I also think about a little bit of, death happens to all of us, but we could also invest in a way that it pays us back in a funny way. So anyway, I just wanted to throw that in there too.
Yeah, and I think, this topic here is so important. I think, for me, having kids, it was definitely something that I reflected on after the meeting, and, talking to parents, also updating me and my husband's will. It's so important. And there was so many learnings. If you guys that are listening wants to hear more of what Buffett has to say, it's about an hour into the QA session. So try to find it on YouTube and listen to it. It's definitely worth hearing what he has to say. We're now going to jump over to a completely other topic, but it's so important. And I experienced that a lot of people already has asked me about this topic. It's something my husband brought up. It was, brought up with friends. So it's definitely one of those topics that people are discussing. And it's about the reserve currency. And we have so much to unpack here, Michelle, in this topic. We talked a little bit about it before recording this podcast, and we really believe there's so much to unpack. So it's actually a 13-year-old girl that asked this question. Daphne, she was there last year as well. This year, she asked about the US currency, and she shared some concerns because right now the US debt is estimated at $31 trillion, which is 125% of US GDP, gross domestic product. And the way that the US is going to deal with that, according to Daphne, is that the US Federal Reserve will continue to print money. At the same time, she mentioned that other major economies in the world, other countries such as China, Saudi Arabia, and Brazil, is moving away from the US dollar in anticipation from what will happen to the dollar. So she asks, are we facing a future where the US dollar is no longer the reserve currency? And how has Berkshire Hathaway prepared for this scenario? And being a reserve currency, just for information, is like being the most important currency in the world. That is usually the one that if you go to an exchange anywhere, you can use that currency to change money.
Yeah, and it's also what a lot of traded goods are paid for in. So whenever either we sell oil or buy oil for gasoline and other purposes, that's usually traded in US dollars. So it's
Yeah,
super
that's what
important.
where China, Saudi Arabia, and Brazil comes in, because for the first time recently, they stopped only taking US dollars for their oil, and that's why, or Saudi Arabia did. So that's where it's getting kind of interesting.
Yeah, so of course it's important because it poses an existential threat to America's hegemony, like America's power and its role in the world of kind of being, the US is like the world police. So in America having that role, Buffett kind of says, in spite of people maybe losing a little faith in the dollar, he says that we're still the reserve currency and he sees no option for any other currency to be the reserve currency. So even though he didn't bring up China's yuan, he doesn't think that that could supplant the US currency as the next reserve currency. So in spite of some of these changes happening, like no matter what other countries are doing, he's basically saying nothing, no other country or no crypto tokens will ever take the place of the US reserve currency. So he still very much believes that the US will maintain its pricing power, its, purchasing power in terms of the dollar being the dominant one. But it's not to say that other things aren't trying to displace the US dollar. By those countries trading oil in other currencies, they're trying to do it, but the US would have to do something really stupid for us to lose our reserve currency status. Like if we keep printing money too much, that causes inflation to go through the roof, and then we become like Zimbabwe or Argentina with some of their inflation problems, or Weimar Germany when they inflated that you needed a whole barrel full of worthless money to buy a loaf of bread. Like if we do that, then other countries might finally give up on the US dollar. But for now, we still haven't gotten too bad. And I think that Buffett ultimately believes that we won't let it get so bad because this is ours to lose. Like if we, as the United States, shoot ourselves in the foot, then, we did it to ourselves. But right now, we're still able to correct the ship. But you can't print money forever and not have it have consequences. So he kind of has also a grave warning to the US government to not let it get out of hand.
Yeah, but I also think, with Buffett, he can't really say anything else because in the past he said something where it was misinterpreted that he didn't believe in the US economy, or the news took parts of what he was saying and actually made it into a story, which wasn't what he was saying at all, but they just took out a part of a sentence that he wrote in his annual letter in 2009, blew it up. On Monday after the letter came out, the markets just fell hard because it was taken out of context. So he really have to be careful of what he's saying. I actually thought he was a little bit gloomy there in his answer. What he also mentioned is that with paper money, and paper money is what we are using now, we're not using gold or silver or anything else. With paper money, we've never been in a situation where it got out of control to an extent where we've seen today. So there's just nobody that knows what would happen. Nobody can predict it, not Buffett, not anybody else. He says, yeah, it's difficult to predict. What he does say is that it's difficult to really prepare for Berkshire Hathaway, to prepare for a scenario like this when there's nobody that actually knows what is going to happen. So yeah, it's going to be interesting to see. And also with BRICS, which is Brazil, Russia, India, China, and Saudi Arabia, that alliance, they are very determined to see the US not being a superpower anymore. So they're going to do what they can to change the world order. I really hope that, there's going to be some solutions found to how to mitigate this huge risk here.
Yeah, for sure. And if we've watched Ray Dalio's Changing World Order video on YouTube, and he's a famous billionaire hedge fund manager, and he also has a book with that same title. A lot of what he points to is how there were previous sort of kingdoms
Cycles.
or
Yeah.
superpowers like Holland, like the Netherlands, and
Absolutely.
the UK and the
Yeah.
US and France. All of these used to be
China.
superpowers, or they might still be to some extent a little bit superpower-ish, but they're definitely shadows of their former selves. And the US is at risk of kind of going down a similar path if we keep getting ourselves into even more debt without paying it off. And that's a real possibility. You know, a lot of people in the US are freaking out about the debt ceiling and all this stuff. And even though Buffett, he maintains like an optimistic, confident face, like people back, I mentioned this in our last episode about how Buffett doesn't think cash is trash. And even though we have a lot of debt, he doesn't see it as so bad. So he's trying to put on a positive face in spite of all of the negativity that the press is making out the US situation to be. He doesn't think it's as bad as the press is making it seem like it. So maybe it's not as bad as it seems. Who knows? Like you said, it's hard to know. But in spite of other countries trying to displace the US, I think the US is still trying to move in the right direction also, like by continuing to do the hard work and produce goods and services, like we're still trying to right the ship. So if we continue doing our part and not let this country get out of hand with, you know, a lot of polarized politics, and if we can listen to Charlie Munger's advice, like live below our means and delay gratification, so not spend too much money. If we can do that, like not get into too much debt personally, maybe we can start improving our own culture in the West and do the right thing. And it's sort of tricky because one person's spending is another person's income, but we can't overdo it. Like if we just go too crazy with the debt, then we'll all suffer eventually long term. So there has to be a little bit more of an equilibrium, and we need to return to balance somewhat. So that's of course going to be an ongoing challenge, but I still have faith in the US. So I hope that we will not get, you know, too either brainwashed or too kind of suckered into things. Like I was just mentioning this to you, that I had a little bit of an insight that social media platform TikTok has taken over a lot of people's attention. And, you know, Americans just see it as a fun platform to kind of post their short videos on. But I don't know how many people realize this or know that TikTok is of Chinese origin. So we just think of it as like, oh, it's funny, you know, watch funny videos on there, right? But really we could be getting influenced with the kinds of content that appears that's still going through something that's originally from China, and it's their Chinese tech. And not to make this like China versus US, but in some ways, like if the US wants to maintain its reserve currency status, but what if, just like how TikTok has become a real threat against Instagram and other American social media, what if TikTok introduced TikTok dollars, TikTok money that people began using in commerce? So just like other things are doing that. I know you were talking about Roblox, right? Like what are the currency used in that gaming platform?
Yeah, Robux. We call
Yeah.
it Robux.
So
But yeah,
see,
you know, it's, or you transfer, of course, you have need real money, and then you transfer or buy some Robux, and
mhm.
then your kids, or if you play yourself, can buy things in the game. And I do really think that you have a point there. It's also funny how TikTok in the West is so significantly different than the platform in China, which is more of an educational platform,
Mm.
and in the West, it's more of an entertaining platform. And there's a lot of people that's been talking about, okay, that is also quite strange. And is it a tactic for China to infiltrate the West? And I can just say, as a Dane, we are really relying on the US. So I also really, really hope that the US is going to get out on a high point. You know, Warren Buffett said in this climate, there's even opportunities to be made, and him and Charlie Munger just made a lot of money buying some bonds because of some insecurities in the market. And you know, when things like that happen, opportunity is there for us as investors. So there's definitely also sometimes opportunities coming out of it.
Yeah, for sure. And we just have to remember, if we're trying to say, if it's a goal for the US to maintain its place in the world, we just have to remember that it can be a little distracting if suddenly we think, you know, crypto tokens are the answer. Like they might not be the answer. Like even as much as we're dissatisfied with how things might be here, we have to be careful to not let like something else either accidentally or purposefully displace the US as the reserve currency, because the more that people, that this is why I think Buffett called the crypto tokens toys, because he sees it as a distraction. But the more that people get distracted, the more that people are in this entertainment brainwashing thing with social media platforms, that's when our culture starts changing and we're getting subconsciously reprogrammed to kind of like, go with another flow. And it's probably not in the US's best interest. And that's why so many American municipalities are trying to block TikTok from government phones, is because they don't want it influencing how we do things in America. So it's very interesting how like these other influences from foreign powers are coming in and they're trying to kind of like influence us. But we have to remember, and that's why we have to keep innovating in the US and in the West, to, if we want to stay on top, if we want to maintain our power, that's what we got to do, is like kind of take back some of the power. So it's kind of like interesting, but I think we can do it. I think like, if we want to, have a prosperous future, it's going to be required that we do that.
Yeah, I definitely see there's still a lot of innovation, still a lot of opportunities coming out of the US, and we need to continue to support that. With that, we could go on, Michelle, but with that, we're actually coming to an end of the show, and we could continue to talk about all of these findings forever because it was such an amazing meeting.
It was so awesome. I highly recommend the Berkshire meeting if you're interested in learning from some of the best investors, Warren Buffett, Charlie Munger, and many other amazing investors. It's a great place to visit if you can. And hopefully, people get to still see some of these greatest of all time investors before they might move on to the next life.
For now, we are done with this episode, but we will be back on Tuesday.
Bye.
If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts, so you automatically get new episodes in your feed. We publish a new show every Tuesday.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice, and if you need help in your personal situation, please consult with a professional.